the trend. An uptrend, as we all know, has a pattern of higher highs and higher lows. A downtrend has a pattern of lower highs and lower lows. The trend can be different on different time frames. I have a friend who's written voluminously on markets, and he says every market is always trending on every time frame. And now that we can look at so many different time frames, we can certainly see that. And here's a way to help identify the swings that make up the trend. This helps me to see the swing highs and swing lows a little bit more clearly. A swing high is complete when the first bar makes a high. The second bar is either an inside bar or it has an equal or lower high and lower low than the first bar. And the third bar has a lower low than either of the first two bars. I like to have the third bar close below the low of the first two bars. I hope this applies as well to stocks. I'm sure it can. I know I love it for futures. A swing low is complete when the first bar makes a low. The second bar is either an inside the low bar, or it has an equal or higher low and higher high than the first bar. And the third bar has a higher high than either of the first two bars. I like to have the third bar close above the highs of the first two bars. And why the swings matter? Well, the swings show us the trend. They show us the higher lows in a bull market and lower highs in a bear market. In a bull market, a close below the swing low that preceded the highest high breaks the pattern of higher highs and higher lows. In a bear market, a close above the swing high that preceded the lowest low breaks the pattern of lower highs and lower lows. And here we're going to look at some examples. This is April gold. April gold had been moving along very nicely. Whoops. We can see that it was clearly moving up as we were coming in. We have a high bar there. I believe this bar had an equal high and a lower low, and this bar had a lower low, so we have a swing high. Down here, we have a swing low. We have a wide range reversal again. That would have been an excellent entry point for me. I don't remember if we did. But that's the kind of entry I look for, a wide range bullish reversal in an uptrend. And then we have an inside day and a bar that traded higher. That defines our swing low. Up here we have a swing high with a high bar, inside bar, whoops, and a lower low. So the 3 days mark a swing. We continue the pattern until we get to here. The pattern doesn't work in triangles because they're narrowing. It requires the particular 3-bar swing pattern requires a widening correction, and a triangle is a narrowing correction, so we have to just be aware of the significance of triangles. And in this case, the stop would be below the first low of the first leg, basically, of the triangle. Any questions about that? In this case, I like to exit on an equal or opposite reversal. If I entered on this wide range reversal, I probably would have exited there. However, I certainly would have exited here. The bears took it down. On the second day, the bulls pulled it back up. And when it broke below that low, I would have considered it a failure. And that was quite a significant failure. Gold has continued to decline significantly since then. So I love that setup, or I like to watch for it. I consider that a swing failure. That's only my own personal term for that. I'm not sure how other people look at it. And here's the swing high, the 3-bar pattern in a downtrend on a weekly chart for the dollar index. The 3-bar pattern remained intact all the way through here, which is a considerable distance and considerable time. It has broken since then because the dollar became so much more bullish. And here's the 3-bar pattern on a shorter, with covering a shorter term time frame. This is a little head and shoulders top that worked out very well. Or I'm sorry, head and shoulders bottom that worked out very well. It had a target of 970, I believe, and it did ultimately work out. We'll see. Here we have a close above the swing high that preceded the swing down to the low. That broke the pattern of lower highs and lower lows on this chart and suggested that the market was going to go up. In conjunction with the head and shoulders bottom, it gave us an excellent entry point. Here we see the way the move continued, and it did reach the 970 target and then some. Came down a bit, and in here we had one of those hurdle bars, what I consider my key hurdles that I like to enter on. And we did take a short position here, risking a close above that high. It appeared to be a lower high top. I'm pointing this bar out because this is where we broke below the low, the swing low that had preceded that high. The market continued to decline. Now we were in at about 950 something, and our target was 800. We looked at this one earlier, and it did reach the target a short time later.